Hello there today, viewers. On behalf of the Market 360 advisors here at Stuart Peterson, I'm Bob Davenport, and this is your Dairy Week in Review for May 16th, 2014. So as always here, let's start out by taking a look at where our CME dairy components settled at the conclusion of Friday's trade. It was another down week for cheese here, with blocks down 4 3/4 cents, settling at 1.99 3/4 this week. Barrels finished at 1.96 even, down 6 cents. Cash butter was down just 3/4 cent on the week, settling at 2.16 even. June whey settled at 65 675, down 3/8 cent here this week, and June non-fat dry milk settled at 1.79 1/4, up 1 3/4 cents. Switching over to Class 3 futures here, it was another down week as well, with June finishing at 20.49, down 74 cents this week. July settled at 20.01, down 26 cents, and that pushes our 2014 average down a little bit this week to 21.05, and that's a decrease of 7 cents from where we were at last week. Now, as I previously mentioned, here was another down week for the block barrel average here, with the block barrel average settling at 197 7/8, so definitely have fallen below that $2 mark that was really our next major support level on the downside here. Now, as you can see, when we go back to where we saw that record high at over $2.40 a pound here, that was all the way near the end of March here, and over the course of that 8-week span to the finish of this week, we've only seen just one up week, and that was 4 weeks ago. Other than that, we've seen 7 down weeks since that record high, and we've pulled back over 40 cents a pound now. So again, the block barrel average was down another 5 3/8 cents here this week. You can just see that little dash there that represents the bar, and the reason why that just is that little dash there is because we didn't really see much volume move this week compared to what we've seen over the past 3 weeks here, which were fairly high volume weeks compared to what we've seen over the course of the past couple of months here. So things definitely a lot quieter this week. There still was some offering, but when we got into the end of the week, Thursday and Friday's trade, it was really very quiet, but those sessions did actually start out with some bids in the blocks, so could possibly be getting to see low enough prices where the buyers may start filtering in here and starting to bid things back up. If that's the case, it could offer some support to Class 3 prices, which did take a hit this week as well. But I think in order to see another leg up on Class 3, I think we're going to have to see a nice rebound in cheese here going forward. So let's take a look at that Class 3 milk chart. Here we have a daily chart of our second month contract, which is still the June contract. That's really what's been leading the pack here recently. So as you can see here, we have been seeing a nice little pullback here over the course of the past couple of weeks. We actually saw the June contract post 2 down weeks in a row now, and we were down 74 cents over the course of this week here, and that's on top of over a 30-cent sell-off last week. So again, we've seen over $1 pullback from the recent high we were at 2 weeks ago of 21.84. So again, a lot of damage has really been done on the June contract here just over the past 2 weeks. Now, if we are going to continue to see this pattern play out here, if we were to finish down next week, that would actually be the first time we've seen 3 down weeks in a row, going all the way back to July of 2013. So really you can see just how strong things have been. Now you can see here also that since we put in this high in the first week of April here, and we saw that first initial pullback, you can see that we rebounded, but we really struggled to sustain any new highs from that point. You can see we tried 3 different times before getting pushed lower here these past 2 weeks. Now that could just be a sign that this market could be due for a correction here. The fact that it's just really struggling to sustain any new highs could be a signal that it may be increasing that downside risk here, and it is more or less due for a bigger correction. That's generally what we tend to see in big bull markets, whether it's milk, corn, really any commodity or any financial market for that matter, tends to play out in that same pattern where these big run-ups really just need to take a breather and take a little bit of a break in the form of a correction before gearing up for that next leg higher. So switching over to some fundamentals here, we got our most recent weekly cheese stocks numbers here this week. Now we were down this week for the first time in 4 weeks. You can see that once we bottomed out here about 5 weeks ago, we slowly began rebuilding those weekly cheese stocks, and we went down just a little bit the latest week, and still obviously running significantly below year-ago levels. Weekly stocks are down 26.4% still from last year. Now the most important thing though that I think we need to focus on on is really, have we reached a bottom here, and are we starting to rebuild those stocks? I think that's the more important thing, is really looking for that turning point actually as to when we're going to start rebuilding stocks and when those drawdowns have really bottomed out. Switching over to our weekly dairy cow slaughter numbers here, you can see that we have really been on quite a decline here recently. Still following that same general seasonal move though. You can see the pattern here on this yellow line for 2014 more or less follows the same pattern of 2013 and 2012 on this chart. However, you can see that we are significantly below where we were at back in 2013, which is represented by the navy blue line here. You can see that this spread is getting pretty wide. So for the latest week reported, generally it was the first week of May here is what this number is for, came in at 48,600 head. That's actually down just 300 head from the prior week, and you can see that things are starting to level out here with this most recent week. We were declining at a pretty rapid rate here going back the past 7 weeks or so, but we could probably expect to see a little bit more of a decline in slaughter until we get to about mid-July, where we generally tend to bottom out from a seasonal standpoint. So looking at the week ahead, it's a decent week as far as fundamental news goes. We'll have a milk production report out on Monday and our monthly cold storage numbers out on Thursday afternoon. So tune into next week's video for a recap of both of those reports. Other than that, that's going to do it for us here today. On behalf of the Market 360 advisors here at Stewart Peterson, thanks for watching and have a great weekend.